Hi, I'm Bob Grisanti, your cameraman. You're watching Taking Stock.
You can come back. 2 minutes to go here until the closing bell on this Thursday, March 5th. Oil up, stocks down. That's the tail of the tape. Let's bring in Einstein of Wall Street, Peter Tuchman himself. What did you see? We are well off these session lows. An hour ago, the picture looked a lot worse than it did right now.
It did. Yeah. I mean, when we met earlier today, it was down. Dow was down 1,000. Right, oil was up. I think that oil being up is one of the things that sort of catalyzed it. We also spoke about it. Goldman Sachs, Cat Tractor, definitely putting heavy weights on the market. I still look, but the reversal, we were hitting technical levels, markets trading on technicals. That kind of sweeps in a lot of sort of enthusiasm about the market. You've got March money, fresh money coming into the market. We've seen that a couple of days in a row. Obviously, we're coming off of those November lows that we saw the other day, right? Which was 6,700 on the S&P and on the VIX around 27.5 and change. Oh, yeah. So things are trading technically, and then there's sort of, I mean, people are just trying to get a sense of what's going on in the market. And as we know, we don't have any sort of, there's still anxiety around what's going on, obviously, in the war. But as the pressure on the market was definitely from oil up. But you know what? At the end of these days, people are looking for buying opportunities. They're not letting the market break down before we get what's called a bid in the market. Yeah. Right? And that's impressive. That's a resilient market.
And of course, we've got the jobs report tomorrow morning for investors to digest. We'll leave it there. We got recipients of the Congressional Medal of Honor. What an honor it is to have them here at the big board. We'll pick up the Taking Stock broadcast on the other side of the closing bell. There we go. Recipients of the Congressional Medal of Honor join us down here on the trading floor of the New York Stock Exchange alongside the 68th president of the NYSE, Lynn Martin. Bob, you and I are going to head over this way, and we will soon bring in our first guest, but your final tail of the tape on this Thursday, March 5th. We have the S&P 500 down about 0.6%. Thank you, everyone. Shannon, appreciate that. The small caps down almost 2% on the day. The Dow 30 down 1.6. The New York Stock Exchange Composite Index will finish in negative territory a bit. This ongoing sell-off down 1.3%. Let's bring in our first guest. Scott Wren, Senior Global Market Strategist at Wells Fargo, joins us via Zoom. Scott, if you can hear me, it is great to have you on the broadcast today. Are you surprised with the chop, the volatility of these markets? Over the last few trading sessions, Scott, it has appeared as if we've had some days that are down almost 1%, some days that are up almost 1%. What do you make of things, Scott?
Well, when I wake up in the middle of the night or I wake up in the morning and I look to see where the market is, you really don't know if it's going to be up a lot or down a lot. So it has been very choppy. It's been volatile. I think you can expect that.
Not here. We're not hearing Scott. All right, we're going to move on at this point. We'll work to bring in Scott Schott. Let's take a look at these. What do you want to do? NYSE notables here, Bob. We got to keep things on the fly. We'll take a look here at shares of Kroger, and then we'll toss to a break. Kroger, one of the few winners on the day. There aren't a lot of green stocks in positive territory. Kroger reporting a miss on revenue, but a beat on the bottom line. It is the first reported quarter under new CEO Greg Foran. The stock is up already 12% here in 2026. The average price target sitting at about $74. That's another 8 or 9% or so off these current levels. Bob, let's swing around this way. We'll take a look at the big winner of the day in the S&P 500. It is energy, and it is only energy. The only sector in positive territory, up about 0.5%. The strongest sector, not just today, but all of 2026. ExxonMobil, Chevron, ConocoPhillips. Those are your strongest, your most weighted names in the sector. Equal weight energy, which is ticker symbol RSPG, also the outperformer today, also the outperformer so far here in 2026. Andrew, what am I doing here? The toss to the break? FinTech TV lead anchor Remy Blair sat down with Adam Meinhardt of Chainlink Labs to discuss the latest on the Clarity Act debate, which continues to rage in the hallways of the U.S. Capitol. Take a look.
Trump is escalating a high-stakes Wall Street turf war over the future of money. In a social post, Trump explicitly backed crypto firms over traditional banks in the fight to offer yield on stablecoins. Now, this clashes the major roadblock stalling the Clarity Act in Congress. And JP Morgan and Bank of America are warning that yield-bearing stablecoins could siphon $6.6 trillion in deposits away from the banking system. Well, the Clarity Act has also hit a new roadblock as banks say they can't accept a proposed compromise from the White House. Meanwhile, critics are pointing to potential conflicts of interest in the White House. Well, joining us to weigh in on this legislative gridlock is Adam Meinhardt, head of public policy for Chainlink Labs. Good morning, Adam, and thank you so much for joining us. So, there's a lot of back and forth between the crypto companies and the White House, and recent comments do suggest we are incredibly close to getting the Clarity Act moving again. So, what is the real vibe on Capitol Hill right now? And tell us about the likelihood that the Clarity Act passes this year.
Yep. First, thanks for having me on. Extremely complex policy and politics at play right now. I'm still very bullish on this getting done in the next month or so. The vibe on the Hill, um, I would say, is very, very positive. I think Democrats have moved a bit and want to see a deal done. So I think that's something that's very, very notable here. There's a real shift there. I think what is the real issue here is what you flagged at the top, which is just this battle between banks and exchanges on the payment of yield. And I think the community bank lobby is extremely strong. They have a very deep grassroots network in every state, every community. So they're able to really influence politics in a way maybe that few others in the financial services space can. So we got to get through the stablecoin yield issue first before we really get to the Hill. So that's where we're at. Tough sledding ahead.
Yeah, and Adam, I understand that you've called the Clarity Act a once in a decade opportunity to actually establish a legal framework for crypto. And as you also mentioned, the big sticking points seem to be yield, DeFi, as well as the role of ethics here. But given how complicated the politics are right now, how do lawmakers actually thread that needle without pushing away the crypto community? And how do we actually gauge the temperature in the room right now?
Yeah. I mean, I think first and foremost, the White House, Patrick Witt in particular, has been a real leader here on keeping these discussions going. Um, I think the temperature is right now is one of frustration on the industry side. They really want a deal, and I think there's a view here that banks aren't coming to the table. Um, that said, the status quo without any legislation actually benefits the exchanges and that they can continue to operate as they are under current law, which allows them to pay yield. So ironically, it's really the banks that need a deal here. Um, so I think that could help push us forward. Um, in terms of this being a once in a decade opportunity, I'm going to double down on that. I think politically, we're looking at the House going Democratic in the fall. 2028 is going to be a toss up. So this window to get legislation done to benefit both consumers and industry really doesn't come along very often. So I really think it closes in a couple months.
Yeah, and Adam, just building on what you just said, what kind of compromise do you think really needs to happen here between the TradFi traditional banks as well as the crypto industry to get us closer to the finish line?
Yeah. The compromise that was on the table initially was one to permit rewards paid based on transactions. This is something similar to what banks do for debit card or credit card payments. That was rejected. So I think something along trans on along the lines of transaction based rewards could be part of it, but I think they're gonna have to permit existing exchanges, to continue to pay their existing customers some form of rewards on static balances. I think that's gonna be a line in the sand here, and we're hopeful that we can get some form of agreement that permits the payment of some form of return for holders of USDC and other stablecoins, be it held in on the exchange and other in another financial institution. But I really think we have to figure out a way that allows customers to get more access to return on static balances. I think we're continuing to hear the drumbeat on this. Banks are paying very, very low rates of interest on their on consumers' checking accounts. So I think we got to get some solution that allows the payment of yield in some way, in some manner, that banks can get their heads around and the exchanges can support here. So easier said than done.
Well, Adam, thank you so much for joining us today, and thank you so much for taking time out of your busy schedule to join us here on FinTech TV.
Awesome. Thank you.
Welcome back to the show. You're watching Taking Stock. Scott Wren now joins us live via Zoom. Thank you for your patience, Scott. He is the Senior Global Market Strategist at Wells Fargo. Scott, thank you for joining the broadcast of Taking Stock on this Thursday. Let me get your perspective, and I am wondering to what degree you are surprised, if at all, given the chop and volatility that we have seen over the markets, even over just the last few days, Scott.
Well, I tell you, the thing is, you wake up in the middle of the night or you wake up in the morning and check the market. I mean, you don't know if it's going to be up a lot or down a lot, and I don't think that really surprises me. What surprises me is we're just not that far from the record high in the S&P 500, even with all the things that are going on out there. And, there's a lot of churn, obviously, underneath the surface. But I think the market's hanging in here very well. We think this situation with the Strait of Hormuz is likely to resolve itself over the course of the next couple of weeks, and we'll see some oil flowing through there. And I would argue that really this volatility is all about the price of oil.
So let me get your take on the price of oil. I'm looking around the floor of the trading floor, seeing if I could see it. But last time I checked, West Texas north of 80, Brent crude north of 80. Scott, do you have a base case for how high it could go? We're talking a lot more about $100 barrel oil the last few days.
Well, I tell you, if the Strait stays closed and we see production facilities within the Persian Gulf shut down or damaged by Iranian attacks or something like that, oil can go higher. But we don't think that's not our base case. We don't think that's what's going to happen. The top end of our range for oil for WTI at the end of this year is $70. So we're pretty far above that right now. but I think, if we saw some resolution here in terms of oil transportation, I think you could see oil come off $5, $8, $10 pretty quick.
Scott, pretty quietly, since the attacks in Iran started over the weekend, we have seen the odds of a short-term interest rate cut be pushed out further and further. Earlier this afternoon, the last time I checked the CME Group FedWatch tool, we're now not expecting a 25 basis point cut until the month of September. What happened, and what is your sense on how that timeline will actually play out, given the uncertainty of the last 5 days?
Well, I think that, certainly these inflation readings are going to be affected in the short term by the price of oil. Now, I would also argue that, higher oil, higher gasoline prices means consumers have less to spend on other discretionary items, and that could slow the economy a bit right there. But we've had 2 cuts penciled in for this year. We had previously thought probably June or September for the cuts, but it makes sense that they're pushed out a little bit further. But like I said, I think this is a fairly temporary situation because it's all about the price of oil. And the Federal Reserve, though, is going to be careful here. They can be careful. We're going to have a good economy this year. We're going to have low unemployment. So, you could make a pretty good argument that the Federal Reserve doesn't really have to do much of anything.
Scott, I'm glad you made that point about potentially pulling back on other discretionary spending. I've been thinking that since the weekend events. You're the only other person I've heard say it out loud. The theory there being if you are forced to spend more money to fill up your gas tank, that in theory leaves less discretionary spending for restaurants, for other goods and services that could work to the benefit of central bank policymakers. Let me get your take, because we are having this conversation on Thursday afternoon, which means tomorrow, 8:30 a.m., the Bureau of Labor Statistics, the February jobs report. What are you going to be looking for, especially after that hotter than expected PPI inflation print we had last Friday, Scott?
I think the no hire, no fire environment is still alive. I don't think it's going to change anytime soon. I felt like we were going to see some additional hiring here pick up. That's been slow to respond, but I think it's going to be more of the same, at least over the course of the next couple months. This initial claims, I think yesterday was a perfect example where continuing claims rose and then initial claims stayed really low. So I think we're going to see kind of a confirmation of that in this particular report. I don't think we're going to see that big upside surprise in non-farm payrolls like we did last time. If you get something in the 50 to 80 range on non-farm payrolls, I think that makes a lot of sense in this environment. Unemployment rate 4.3, somewhere around there. I think that makes sense too. So I don't think we're going to see a lot of surprises tomorrow.
Scott Wren, Senior Global Market Strategist at Wells Fargo. Thank you for dealing with us through the tech issue, Scott. Come back on the broadcast anytime. Folks watching at home, don't go anywhere. Much more of this special edition of Taking Stock, including an interview with a recipient of a Congressional Medal of Honor you simply do not want to miss. Stay tuned. More show after this. Welcome back to the broadcast. You're watching Taking Stock live from the trading floor of the New York Stock Exchange. And now it is my honor to say we have retired Command Sergeant Major Matthew Williams himself, a Medal of Honor recipient, down here on the trading floor of the big board and now joining the show. Thank you for your service, sir, and really nice to have you down here at the New York Stock Exchange.
Appreciate you. Thank you.
Can I first and foremost get your perspective? What is it like for you and all these other amazing recipients of this incredible award to join us down here for closing bell today?
Yeah, it's a true honor. The stock exchange represents capitalism and freedom and patriotism, the capital markets, and none of that's possible without the men and women that serve our country, allow us to be free and do the great things that we do. And we're honored as Medal of Honor recipients to represent all of those that are still serving overseas, around the world today, doing America's bidding and taking care of our country, allowing us to do the great things that we love to do as a free society.
I hope you don't mind me asking, to any degree that you're comfortable sharing, can you talk to us about your own experience in combat that led you to be one of these deserving recipients?
So I joined the Army right after college and decided to be a Green Beret, U.S. Army Special Forces, and was deployed to Afghanistan. And April 6, 2008, I found myself and my team trapped on the side of a mountain in a pretty large ambush. And we did what Special Forces do. We bound together, we became a team, we evacuated 4 of our wounded American casualties off the side of the mountain, looked after one another, protected each other. And then at the end of the day, 10 years later, 2019, our medic, Ron Schur, and myself were notified that we were upgraded to the Medal of Honor, and just honored to represent the team, the U.S. Army Special Forces, and be here today.
I'm incredibly grateful for your willingness to share your story and your background and service. What do you most want the average American at home to recognize about not just being a recipient of the Medal of Honor, but really the experience that you and so many others have had in actual times of combat?
Yeah, I think the most important thing that the Americans around the country can really take from seeing the medal or seeing troops and is understanding that our country exists because of service and the willingness for young men and women all over the country to raise their right hand, support America, defend America, do the nation's bidding when called to do so, and do it at a very elite level. We're just honored to be a small representation of all of those men and women that do that every day.
If you don't mind me saying, a huge representation of the men and women in our armed forces who do that across all branches of the military. It's one thing, and it is our honor to have you down here at the New York Stock Exchange. It's one thing to honor your sacrifice on one particular day, and in particular this certain Thursday that you're joining us. What do you feel we could better do, or what should we be doing to make sure we keep the memory of all those who have served, not just on particular days of recognition, but every day throughout the year?
That's a great question, and I appreciate you asking that because I think that's extremely important. We lived for 20 years with people at war during the global war on terrorism, and that's kind of started to wane. But we have to remember that there are men and women on the front lines all over the globe, always. Protecting, defending America, as we can see today in Iran. With the situation going on over there, we're thrust back into the throes of it, and great Americans are over there taking care of business, whether that's launching missiles or whatever they're doing. They're doing the bidding of America, and they're keeping us free and safe. And I think it's important for everybody to remember that without those people willing to do those things, we don't get to stand here and do what we're doing today.
Retired Command Sergeant Major Matthew Williams, a recipient of the Medal of Honor. Thank you for your service, sir, and thank you for coming on the show. Come back and join us at the New York Stock Exchange anytime.
Appreciate you.
Don't go anywhere. Much more Taking Stock live from the NYSE coming up after this. Welcome back to the broadcast. Joining the show at this hour via Zoom is Mauricio Di Bartolomeo. He is co-founder and CSO of LEDN. Mauricio, it is great to have you joining Taking Stock on this Thursday. Talk to me about some of your work at LEDN and ultimately what makes a Bitcoin-backed loan different from a more traditional bank loan.
Hey JD, yeah, happy to share. So LEDN is a Bitcoin-backed lending company. We use Bitcoin as collateral to give you a dollar loan. Why this product resonates with people today is because at LEDN we lend you dollars based only on the value of your Bitcoin. There is no credit check. There's no income checks necessary to get these types of loans. So they're very adequate for somebody that's a Bitcoin entrepreneur, a person that is self-employed, a person that runs their own business. And also, this is a global asset. So we reach clients in over 100 countries. And by using the same asset to underwrite credit to people all over the world, we get to offer people all over the world equal terms and equal treatment, which is really financial inclusion in action today. I think that's why you're seeing these products explode in popularity.
Are there risks that investors should know when it comes to borrowing against Bitcoin?
Yes, definitely. So I would say there are two primary risk buckets that I'd like to reference. Number one is the platform itself, the service provider. So you want to make sure you're working with a group or a company that has a long track record, that has been operating for over 8 years. We're backed by companies like Tether and others. We're fully regulated, and we offer proof of reserves. So Ledn has the longest track record of operating in this space. So I would say that that's one. The other one is when you're borrowing against an asset like Bitcoin that is a volatile asset, it is important for you to understand the margin requirements, the loan to value ratios, that your loan needs to be in a healthy place, and for you to have a plan in case Bitcoin price moves south and you have to add additional Bitcoin to protect your loan.
Mauricio, I wonder, do you think Bitcoin is evolving more and more into a global collateral asset, similar to the way that digital gold trades?
I absolutely think so. In fact, Ledn just completed the first ever issuance of a Bitcoin-backed loan ABS bond that was issued 2 weeks ago, and it was the first time that a Bitcoin product has entered the U.S. ABS market with a investment grade rating from S&P as a first-time issuer. The deal was more than 2 times oversubscribed, and this is our first one ever. I believe that this is the first time a Bitcoin company is tapping into the $2 to $3 trillion ABS market to access funding. And I think that given the demand that we saw for this offering, this is a path that is wide open for companies like Ledn to continue accessing funding with a lot more transparency and better terms that we can then pass along to our clients.
Mauricio Di Bartolomeo is the co-founder and CSO of Ledn. My apologies, I mispronounced the name of the company at the start of the interview. Mauricio, thank you for being with us on the broadcast. Please come back anytime. It is great to have you. And now, Money 2020's very own Scarlett Siever brings you the latest edition of Jargon Translator, putting wonky, complicated finance terminology into everyday language you can better understand. Take a look.
Welcome back. I'm Scarlett Siever from Money 2020, and this is Jargon Translator, where we decode the terms finance people casually drop into conversations like everyone else keeps a Bloomberg terminal at home. Oh wait, I guess that's just me. Have you ever seen the market panic so hard it forgets how to turn assets into cash? Yeah, that's what we call a liquidity crunch. A liquidity crunch is what happens when there's not enough cash or cash-like assets available to meet the short-term needs. Basically, it's the financial version of opening your fridge, seeing nothing but condiments, and realizing, yeah, you probably should have gone grocery shopping yesterday, and you know you've been there, we all have. In markets, liquidity is the ease of turning assets into cash without tanking the price. When liquidity dries up, even good assets get hard to sell, borrowing gets expensive, and everyone starts sweating like it's Fed announcement day. So what causes this exactly? Well, panic, uncertainty, margin calls, lenders pulling back. Sometimes this all happens at once. When people rush to raise cash, you get a stampede. And stampedes don't exactly create orderly markets now, do they? Historically, liquidity crunches have triggered some of the biggest market crises because when cash disappears, confidence disappears right alongside it. And confidence for these markets, this is oxygen, people. Liquidity crunch, when the market needs cash right now, and cash don't care. That is your jargon translated for today. Have a term you want us to break down? Drop it in the comments below, and it just might make the cut. Back over to you.
Your final tale of the tape on this Thursday, March 5th, here on Wall Street. The broader major market indexes all down with a fair bit of profit taking and a sell-off despite 1.4 billion total shares here at the NYSE. The S&P 500 finishing down 0.6%. The Dow down 1.6. The New York Stock Exchange Composite Index down 1.9. And the small caps, as to be expected, the Russell 2000, the hardest hit among the majors, down 1.9%. 25 of the 30 Dow components in negative territory. Those losses led on the day by Goldman Sachs and Caterpillar, both down 5%. They both also happen to be the two most weighted names in the Dow. Tomorrow morning, Friday morning, here on Wall Street at 8:30 a.m., the latest jobs numbers for the month of February from the Bureau of Labor Statistics. That'll do it for today's edition of Taking Stock. Have a great night. We'll see you again tomorrow. Woo!